Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start with, the Australian dollar lost ground overnight after a brief attempt towards the upside failed to challenge the 78.55 resistance. After printing a high of 78.23, the market fell substantially to a low of 77.69. With the support taken out at 77.80, now gives further scope to the downside, with my initial objective now at 77.20. Coming up today is the Australian CPI, which is forecasted at 0.8%, previous was at 0.2%. An unexpected rebound may provide a mild bullish reaction to the Australian dollar, even though the view is bearish. Could also stir up the RBA, which potentially is holding cash rates to the low 1.5%. Now, towards the end of the year, I do expect to see talks from the market that a possible rate hike might be coming from the RBA. So the CPI figure that comes out at 11:30 today may give some clues into what the RBA may be thinking. As I mentioned, I'm looking to sell rallies towards 78.05 to 78.55 with the downside objective of 77.20. The euro still holds further weakness and still expects 117.25 to be challenged. Any advances should still fail towards the 118.30.50 region with a minor resistance at 117.85. Now, the dollar index did trade a high around 93.85 this morning. A clear break above there and a close above there of 93.85 in New York tomorrow morning would give further scope to the upside to 94.40.45. And this would in turn see the weakness for euro to look towards 116.80 to 116.30. From the initial rejection from the 114 area to the start of the week, the market has slightly staged a firmer recovery this morning and now looking back towards that level of 114.05.15. A break above there would give further scope, but whether or not the market can take on and sustain the challenge at 114.55 still remains questionable. I'm still a buyer on dips, and anywhere towards 113.25 to 112.80 is still viewed as a potential buy. Still keep in mind that the geopolitical risks still remain. Therefore, any new updates in the newswires could actually see a slight strength of yen and easily see this market turn around. So still be a little bit cautious. Technically, it's not fully bullish, so we may see a failed challenge if seen above 114 today. Well, the sterling's come back to a bearish phase after rejecting the region of 132.40.45 and now looks back towards the 130.80.85. I did state yesterday that the technical implications were concerning, and obviously from the market itself last night did come through to that case. Now, that being said, I do expect to see demand from 130.80 and look up towards the top side of 131.80 to 132.40.45. But the Bank of England still expecting to hike rates on the 2nd of November should put a bullish tone to the sterling and expect to see a move up towards 132 to 134. Well, the dollar slightly strengthening overnight. The market has actually slipped away from the 180 handle and now looks down towards the 1,276 support. I'm still a buyer on dips, and any move towards 73 to 70, I expect to see demand, with eventually the turnaround back towards 82 to 88 to 90, which was the failed rejection point. Keeping stop losses tight under 70, I would step away from the market, as we could see a $10 fall towards 58.60. So do keep that in mind if we see a breach of 70. And to wrap up with the market, the oil is a little bit firmer overnight. However, I still question the technical implications. There's no support from the histogram, and the MACD signals are flying to the sideways, and a coasting stochastic and a coasting RSI isn't fully supportive for a further rise. So see how the market plays towards its top side, 52.65.75 to 53. It was a rejection before and could so again. That wraps up my daily video. Thank you very much for joining me today, and I hope you have a wonderful day that's ahead of us.